like over the past, it did what it normally did over the past. That's not really much use. Seasonals, the real benefit is being able to see ahead, to know what seasonally has occurred over the last, in my case, 5 and 10 years in the upcoming chart. In fact, we can even see that over the last 10 and 15 years, we've normally seen a decrease actually from June to August. That is the seasonal trend, although we did see kind of a bit more of a bouncing back and forth over the 10-year instead. So take that with a grain of salt, but overall it did still end up going down in the end. Normally, for a seasonal trend, you want to see something a little bit stronger. Normally you want to see something that, if we're in here and we were to turn on some threshold lines, a break below the 10-20% that ends up going above the 90 or 80%. So it's going to be a strong seasonal trend that goes through. That's actually an interesting way to go through and look for a really strong move there. Definitely interesting to use anyways. Alright, now let's go ahead and look at another technical indicator that I like to work with. I actually like to work with the COT as well. I'm going to turn off the seasonals, and I'm going to turn on my COT, or Commitment of Traders indicator. The COT is actually a very powerful tool. It's letting you see what everyone is doing. I mean, what better way to trade than knowing what everyone else is doing? The COT actually is a report. It's generated by the government. What they do is they go through, and on Tuesday of every week, they scan all the markets and all the trades. They basically go through, and if anyone does anything, they record it. Then, from Wednesday to Friday, they analyze it. Do whatever it is the government does with all that information. Probably read over it a couple times and bury it under the ground and jump up and down on it. Who knows? But before they bury it or get rid of it, you could say, they release it. They actually release it to the public on Friday evenings for that Tuesday report. And what we get out of that is the Commitment of Traders, the COT or COT report. This report will show us in 3 separate categories where people are going. Alright? When you're looking at the COT, you're looking at 3 specific sections: commercials, non-commercials, also known as large speculators, and the non-reportable or small speculators. Things to keep in mind. The green for the small speculators, that's me and you. That's the guy down the street. That's the people that are trading basically smaller. Okay, they're the people that aren't necessarily the big players. In fact, if you really wanted to, out on a limb, you could even suggest that they're the ones who normally lose money. Okay, because the blue or the large speculators, they're the ones who are on Wall Street. They're the ones who have 20 different people to watch the price of rice in China. All right, they're the ones that make the big bucks, and they're the ones that normally go the right direction. That's why they make the big bucks. All right, and the red, that's going to be your commercials. That's people who actually have the product, the people who are selling it, the people who are actually working with the money. Okay, or they're working with the grain, or they're working with the metal. Okay, that is when you're working with your commercials. Okay, so speculators are blue, small are green, commercials red. Now, one important thing to note: the COT report by default is broken on a 0 axis. It is split down the middle. Let me go ahead and just turn this on so you can see it. Alright, so here is a 0 threshold line, just a line I've basically put down the center of this tool. What this represents in the chart window is specifically the break between 50-50 of going long and short, or going more long, or going more short. Okay? If the bar appears above the 0 line, that means that this many of the large speculators in this case are going more long than short. If the green's up above right here, it means that more of the small speculators are going long than short. And the red, same applies. More selling than going long. Notice here that the large speculators, they're going with the trend as it's going up. Here, they're all going more long than short. And the market is doing the exact same thing. Okay, it is going more up than short. Then take a look right here. All of a sudden, the large speculators even out. They start going almost 50-50. They're staying right on that 0 line, and all of a sudden, just as many are going short as are going long. And the small speculators make the swap. Right here, you'll notice that they were going short, and all of a sudden, they jump up, and you know what? Now all of a sudden, more of them are going long than short. And at this point, now they're following along with the uptrend, which only lasts for a couple of weeks, and then all of a sudden the market drops quite a bit. Notice that when the market's dropping, large speculators, where are they at? They're down here below. They're all of a sudden selling more than they're going long. But small speculators, as is often the case, are behind the trend. They're still over here buying more than they're selling. In fact, as the market starts to drop down even more, they're still buying more than they're selling, and they're losing their shirts. While the large speculators, however, are usually cashing in. All right. So when you're using this tool, oftentimes I'll almost use the small speculators as a signal of what not to do. It's kind of funny, but I'll see which direction they're going and say, you know what, I'm not going to do that. And then, of course, I follow the large speculators. They're the ones that pull in a lot of money. Now, that isn't always the case. Not everyone's always ahead of the game, but if I had a choice of who to follow, whether it's Bob down the street or if it's 30 Bobs in a company in Wall Street, I'm going to listen to more. So, this information here. Also, by the way, take a look here. Notice this yellow line that follows along with COT. This is actually your open interest. This is showing you how many people are holding contracts overnight. So, as you go through all these different Tuesday reports, it's showing whether or not the open interest has increased or whether it's decreased. Seeing a big dropout in the number of people holding in positions overnight, that can be a very big sign of whether or not the market's picking up, slowing down, if it's about to die. Right here, we see a big old spike of people holding in contracts, and then all of a sudden, this open interest tanks. At the same time that large speculators are all of a sudden neutral 50-50. At this point, the large speculators dropped their orders. They closed out. They cashed in. You can see it right in the chart. They were up here. They were selling more, or buying more, and then all of a sudden, open interest is way down. Large speculators are no longer buying more. They're even selling more. So they liquidate positions and even win a little bit more short. At this point, okay, although it doesn't generate an arrow, in my mind, I see a giant arrow saying, all right, get ready to go short. That's what I'm seeing. I mean, the market ends up still going up for a while because all of a sudden the small speculators jump in and want to join in for a bit. But still, I mean, you look at it. When you see it, it's obvious what happened. And then, of course, the small speculators keep on dumping in, and they're still doing it even right now, even though the market dropped. It really did. I mean, way up here to right now, market's down, per quantity one for a mini contract, $5,850. If you want to look at points, it's down 468 points since the top of that move, and yet small speculators are still joining in. That's some risky stuff right there. That's your shirt that you're losing. So it's a good idea to keep an eye on the big players. Now, COT reports, they come in on Fridays for the Tuesday report. They're showing you where people are going, basically pointing in the direction of where you're trading. Great way to look at it, actually. By the way, this JBCOT has a couple extra perks. One of them is that if you turn on the JBCOT, you actually get buy-sell arrows inside the chart. Take a look at this. Remember earlier when I said that I would have put a big old sell signal right there? And I really didn't look at this beforehand, by the way. I hadn't even turned it on yet. Well, JBCOT did. Okay? It actually says, whoa, something just happened. Let's go ahead and place an arrow to go short. And it was right. It is going to go down. I mean, it obviously preceded the move. It was further ahead. But, really, we're seeing a big shift at this point. We ended up still seeing a drive for a while, but overall it was going back down. And it even actually called this as well, which is right when they started jumping in. So, COT, great technical indicator. Normally something I'll add in along with another tool. I'll use it as maybe my overall trend or direction. I don't normally use it for entering into the market, but I do use it to show me which direction I should be going, and I wait for another technical indicator to actually give me my entry point in time. Maybe I'd use this and say, okay, so if I had gone long down here, and as soon as I receive this signal, I all of a sudden would maybe tack on a trailing stop to follow and just start getting ready to get out, basically at that point, and expect the return. Hopefully I catch some of that move and keep on going up, but in the end, I'm expecting to go short, and I could even have another technical indicator and wait for my signal to do so, like here. Advantage lines, popular chart overlay, actually one I use all the time. Look right here, gave a signal to go short on this bar. If you'd gone short on the open of the next price bar, I think you would have liked that. don't you? Take a look here. Open to close. In one bar, you would have gained, what, 170 points? To its low, you could have made, wow, 400? Enormous. Ugh, just enormous. But obviously, I mean, what's happening with E-mini S&P, take all the technical indicators with a grain of salt, because all this is very driven by fundamentals as well, not just technicals. So, anyways, COT, very popular. You can also view it on weekly charts and monthly charts. Something I normally will look at for longer-term contracts. Maybe try to open up gold again. Here's my gold. Turn on my commitment of traders. Turn off slow stochastic. And maybe even switch over to the weekly or monthly. And look at that COT report in the chart. Get a good idea of what's going on. I like it. See, here on a weekly, you're going to be seeing it per price bar because every single week you have a report to go with it. And then you can actually watch what's happening right in the market. All right, so gold, looks like just about everybody's been going long in gold. The large speculators have been going long a lot more, it appears. Just looking at the blue up above, green's just right here, and commercials are certainly selling as well. But you can see right here where we have this drop down, and then we see that the open interest is way down. People have been cashing in, taking their money. Then all of a sudden we start to see the open interest increase incrementally. At the same time open interest increases, so does the market value, which means more people are holding their markets overnight, their orders overnight, excuse me. So they're not just buying it and then getting out. They're not day trading. They're buying and holding. They expect it to go up. Kind of an interesting thing there. So, anyways, COT, very popular actually. And you can also display it in multiple different ways as well. Looking over here at COT again, I go to the Preferences tab. Let's see. One thing I like to do is when you select to include options data, I do like to include options data, by the way. It's just a tidbit from me, but I like the results that I get more. That is completely me talking. All right, that's not necessarily Gecko. That's just Jeff here, but I do like my options data included. Next to that, you have display as. If you're not a big fan of having it split on a histogram, you can't show it in different ways. You could actually show it just as lines. Okay. If I do that, I'd probably get rid of my threshold line in the center. Well, maybe I wouldn't actually. I'd probably get rid of my JBCOT lines. There we go. All right, and you can look at this and then just know that at the zero line that's your break, and is it going above or is it going below. You could add in that white line again to get a better look at it. Another option is to display both the long and short positions as a histogram. Okay, this is a little bit different. This is going to be showing us how many are going long and how many are going short, all split across the zero axis. So we're not seeing, a difference between long and short in the distance going up and down. The distance up is how many went long. The distance down is how many went short. Just looking at the chart. Okay. So different way there as well, and then long and short as lines is also an option. All right. Now let's go ahead and take a look at one more thing before we wrap up today. And again, no questions so far. Go ahead and write those in if you have any. All right, so that's the COT, popular. Important tidbits, okay? First of all, COT is not available for intraday charts, okay? So if you ever are on, say, a 60-minute chart and you want to take a look at the COT, grayed out, it's not even there. If you have the COT open when you switch, it's just going to be blank. It is specifically a longer-term indicator. Flat, it is a longer-term indicator. Day, week, or month, those are your options, okay? It's not going to appear in intraday. When you're working with the seasonals, you're going to turn on seasonals, switch down to an intraday, exact same, okay? Seasonals is also a long-term trend. It's based off of daily data is the main thing to take into account, okay? So the closing values per day, that is what generates your seasonals, so it's not going to be in the intraday. So if you switch from intraday and wondering why you can't see seasonals or COT, that's because you're not on the right time frame. Bump back up to at least a daily, and then those will reappear, okay? All right. Now, let's see. We're actually out of time for now. I've only got about a minute left, so I'm going to go ahead and stop now. If you have any questions, go ahead and write those in. I'm going to stay here for a moment, and I'll answer them as they come in. I hope you've enjoyed the webinar today. I hope you come into more in the future, and I'll see all of you again next time.